Hello, fellow Rebel Capitals. Hope you're well. So, big news of the day, retail sales really took a hit. We're going to go over that. And keep in mind that retail sales are in nominal terms. So, when you adjust for inflation, it is a heck of a lot worse. Also, the New York Fed's manufacturing survey comes out today and plummets to a level that we haven't seen since 2023, which, of course, begs the question, is the economy starting to roll over? Are we seeing the cracks in the dam, so to speak, get bigger and bigger and bigger to the point where even the mainstream media has to acknowledge it? The narrative changes, and then the stock market continues to go down. There are no certainties, only probabilities, but I think these are the questions we need to be asking as prudent investors. And then also want to touch on this insanity from the New York Times. In this article, they had the audacity to publish this Sunday. You're definitely going to want to stay tuned for that. So first and foremost, let's get over to retail sales out today. Here we go from the U.S. Census Bureau. And you kind of get the feeling, too, that the floodgates are opened as far as the economic data. And what I mean by that is they're holding back, or let's say spinning the data, manipulating the data when Biden was in office. And now all of a sudden it seems like, okay, we can tell the truth. The floodgates are open. Here's what's really happening when we open up the kimono. Maybe that's happening. Maybe it's not. Food for thought, right? So when we look at the U.S. Census Bureau, and this was released today, advanced monthly sales for retail and food services. Now, first and foremost, look at the trend. So going back to December, you see that they are all positive numbers, although, like I pointed out at the top of the video, and what I was saying back then, or highlighting, is this is not adjusted for inflation. So especially when you look at the January numbers, which, by the way, were revised down today to a negative 1.2%. More on that in a moment. And then we see this kind of trend continue where the numbers don't look that hot, especially the autos. Wow, they're really getting pummeled. But think of what it would be in real terms, because at the end of the day, we don't want to know what's going on with nominal prices. We want to know with what's going on with economic activity. And therefore, it's a little suspicious that they don't report the real numbers to begin with. Check this out. Advanced estimates of U.S. retail and food services sales for February 2025, adjusted for seasonal variation and holiday and trading day differences, but not price changes. They just say that right here. They adjust for all these things, but not price changes. It's like you would think that if there was one thing that they should be adjusting for, it would be the thing they're not adjusting for. I think that's very curious. But the details for the actual report was so this for February 2025 was a plus 0.2%. Now, the market was expecting a plus 0.6. So way below expectations, especially when you include the revisions, like we were saying earlier, to January of 2025, where the revised number is a negative 1.2%. Getting back to the total dollar amounts, so the trading data, but not price changes, were $722 billion, up 0.2, we said, from the previous month, and up 3.1% from February 2024. So then just do the math. I mean, CPI right now is right around 2.8%, but I think most of you guys on the live stream right now would say real prices in the real economy went up way more than 2.8%, and you'd probably say they went up a hell of a lot more than 3.1. So the main takeaway is, if you're one of those people that do believe the basket of goods went up by more than 3.1%, then you would also, especially the basket of goods that pertain to the metric or the inputs for the metric of retail sales, right? So I'm assuming retail sales don't include housing. I'm guessing they don't include energy, especially when it says retail and food. So yeah, of course it doesn't include energy. So other than energy, housing, okay, you strip that out, and then you got the retail stuff. I think it's extremely important that we, again, want to know Well, actually, I think the main point here is if you just look at retail and food, and I asked you, what do you think prices of just those categories of the basket of goods, looking just at the CPI in totality, what do you think the prices increased of just retail and food over the last year? I'm sure most of you would say way more than 3.1, which, if that's your base case, or if that's your belief, then you would also have to believe that retail sales, the important metric when you adjust for inflation, would actually be negative. And why is that important? Because the US economy is 70% consumption, and therefore, if you're trying to figure out which direction the economy is going, you've got to look at that inflation adjusted number. That's going to be right up there at the top, in my view, with the unemployment rate and real GDP. By the way, on that, I have not looked at Atlanta Fed's GDP lately. I mean, you guys were, I'm sure, watching my videos on that, how they went from this GDP Now predictor they have, went from, what was it, 2.3 all the way down to a negative 1.5, and then went down to a negative 2.8. So I'm actually curious. I haven't looked at this since I did those videos, but it kind of pertains to the topic at hand here with retail sales. Oh, so it kind of bumped up to a negative. So we were at a negative 2.8, and then it bumped up to a negative 1.5, and now we're back down, most likely because of the retail sales today, to a negative 2.1. Yeah, and the last estimate was March 17th. So I'm assuming they looked at this US Census data, and then they probably looked at the New York Fed manufacturing, which we're going to talk about in a moment, and that's why you got another steep decline. Although I don't know why kind of the number went up here, but getting back to the topic at hand. So I was going to go over this video, but you guys kind of get the gist. They interviewed, CNBC, former Walmart US CEO Bill Simon. He says the consumer might be turning a corner as far as they're tapped out, is the punchline. But look at all these other videos just from today. So Liz Everett from B of A, consumers are changing how they're spending, which she's basically saying the same thing. Target CEO Brian Cornell, of course they got to put on tariffs. Consumers will likely see price increases. Next one, it's unlikely retailers will pass on tariffs, meaning people will spend less money. And a chorus of caution from retailers. And then they talk about another survey where consumer spending declines for the second straight month. And then they're going over the data from the US Census that we just discussed. So, I mean, you combine that with what we were talking about, and I think I deleted the tabs. But last week, if you guys were watching the channel, we talked about American Eagle, we talked about Zara, both coming out and saying that, yeah, sure, we had a decent quarter, but looking out into the rest of 2025, we see the consumer really pulling back. And then you look at the Michigan survey, we talked about that the other day, where it's not just the Democrats. Now, it's also the Republicans and the independents really expressing concern about the labor market. And that's a big deal. Why is that a big deal? Because we'll just go right over to a tab that I fortunately did not close, which is the unemployment rate. And every single time you get a recession, you get a spike in unemployment. I mean, look, we're going back to 1949 here, and just show me the recession, which is basically indicated by the gray shaded area. Show me the recession where we didn't have a spike in unemployment. That would be zero. That would be zero. So this is as good of an indicator as it gets. And you can see we're starting to trend up. You guys know the SOM rule was triggered from watching my videos. And now, yeah, we're back up to 4.1%. But if the consumer sentiment based on the Michigan survey is correct, and the job market is getting weaker, the labor market is softening, then you would expect for this number to continue to go up. Now, are we at the point where it just goes parabolic? Probably not, because that's when the stuff really, really hits the fan. And I don't think we're there yet. But it seems like this cycle could be playing out the same way. No certainties, only probabilities. But my point in bringing up the unemployment rate was just to illustrate how I think this is extremely important to really get focused on in this part of the cycle to see how this plays out. Okay, let's go over to, actually, you know what? I want to look at this article from Zero Hedge, but I'll bet you they did a deeper dive on the retail sales right here. Yeah, let's check this out. Retail sales disappoint in February despite major downward revisions. So here's a tweet: B of A retail sales preview based on real-time card spending data, not pretty. Okay, so they're adding a little bit more nuance here, some more data on top of just the retail sales I went over from the US Census. So this looks like a survey from B of A, which oddly enough came out. Well, let's look at the charts. Okay, so if our forecast of flat retail sales ex autos print in February is correct, the 3-month average growth rate would decline. Okay, I guess this is per B of A. And the B of A forecast, Bloomberg consensus, retail sales, and that is for February. So the actual number, if I'm reading this correctly, came in even lower than the B of A forecast. The overall consensus or the overall expectations was 0.6. It looks like Bloomberg consensus was 0.8. So again, a huge miss here. Big miss. But let's get back to this Zero Hedge article if I possibly can. There we go. Falling last month, 0.9% month-over-month plunge, which was revised down to a negative 1.2%, which we discussed earlier. February saw retail sales disappoint. Okay, we were talking about that. The big contributor, it looks like, autos, electronics, gas, department stores, food services, so restaurants, which, look, it's no surprise. I mean, this is discretionary spending. Exactly what you would expect. It's Maslow's hierarchy of needs. And when people are really strapped and they start cutting back, they're cutting back on the discretionary stuff here. So biggest drop in food services spending in 2 years. Core retail sales met expectations, but also saw downward revisions. And I think the core is X a lot of things that are really, really important. So that's okay. It's like when they do the CPI or the inflation rate minus everything that you buy every single day. On a non-seasonally adjusted basis, retail sales are actually down year over year, right? And that's even in nominal terms. Oh, here they go. Adjusted roughly for inflation, real retail sales is basically flat year over year. And that's if you buy the CPI. And this is this control group that is kind of like cherry picking data just to make things seem better than they are. Trump learning from Biden. January revised much lower, means lower. Yeah, that's kind of funny. Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow Rebel capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.